Mortgages can feel complicated. There's lots of jargon and numbers and fine print, but understanding how yours really works is one of the best ways to take control of your money. This episode, I'm joined by Simon Farrell-Roberts, Head of Mortgage Lending at Skipton Building Society, to break it all down for us and share some simple ways to get on top of your mortgage. Simon, that they can feel intimidating, mortgages, can't they? But they are also really important to get to grips with and to understand. How do people really figure out what they're paying for every month?
They can seem intimidating, Phil, but I think it's important to dispel some of those myths. So in terms of thinking about your mortgage, I'd think about it in two parts. Your mortgage payment, firstly, is the capital, the principal balance that you borrowed, and then also the interest that you're paying for having the lending from the provider.
Yeah.
You might be on a repayment mortgage. So the monthly payment you're making is paying off that principal, but also part of the interest.
Yep.
Or an interest-only mortgage, which is simply paying off just the interest. So effectively,
in which case,
balance.
capital remains.
Absolutely.
Yeah. And if you're able to make small overpayments, does that, over the course of the term of the mortgage, does that make a big difference?
It really can. And I'll pick up there on the point small. There's no smallest amount. I mean, £100 a month, if that is affordable to you, can actually save significant amount of time on the term of the mortgage, reducing that, but also reducing the level of interest that is charged across that term.
Can you talk a little bit more about that?
Yeah, absolutely. So most lenders allow you to overpay on a mortgage, and you can do that in a number of ways, digitally or setting up a standard payment over and above your monthly payment.
Yep.
And what that will mean is that you're charged interest on a shorter term, so you don't pay as much interest through the life of the mortgage. So small amounts will
make a big
difference.
difference. And if someone's been on the same deal for years and years, why should they take a look at it now?
It's really important that the mortgage is working for you and in service of you. So the market changes quite often, dynamics externally, and our own personal circumstances change. So our lifestyle, our earnings, etc.
Yeah.
So it's really important just to take a step back and think about what rate am I being charged? What deal am I on? And is that deal working most effectively for me? You may have reverted to the standard variable rate, the mortgage variable rate, which can be higher than the deal that you're on. So it's really important to understand how much you are paying, the term that's remaining, and the balance.
And talking about understanding things, at the end of each year, you get an annual statement. What details out of that annual statement should people really concentrate on?
So I'd encourage everyone to have a look at that annual statement firstly and not pop it on the top of the microwave. The annual statement is a really helpful document that gives you a sense of how you're tracking the mortgage. And I would draw attention to three things: the interest rate, so the type of deal, fixed or discounted, and whether that deal has expired or not. I would look at the remaining term, and I would also look at the balance that is outstanding.
Okay. And let's talk a little bit about LTVs, loan to value. Can you just talk us through what does it mean, and indeed, why does it matter?
Yeah, so the loan to value is really important in the sense that it's the amount that you borrow against the value of the property. So for example, let me add a little bit of colour to that. So if you've purchased a property that's worth 200,000 and you say borrowed 150, that's a 75% loan to value. That's important because the rates that lenders will offer you at remortgage will be determined by the loan to value, and a lower loan to value can often be a gateway to a better deal. There are things that you can do that can impact that loan to value. So overpaying can bring that LTV down. In addition to that, where you've made improvements to the property, or organic house price growth can benefit.
Okay. And if someone is unsure where to start with this whole exercise, any particular tips, things that you pop in their brain?
Yeah, again, I draw to them to speak to the lender to look at the mortgage account online, or as you say, on their statement. Speak to the lender if that's appropriate. At Skipton, we've got advisors available to make the complex seem simple. But again, thinking of those 3 points, so the deal that you're on and when that expires, the term remaining on the mortgage, and the outstanding balance are important.
Okay. And if somebody's listening today and just wanted to do one thing to make sure that they're in control of their mortgage, what might it be?
So I would guide to check when your existing deal ends. So has that ended now, or is it about to expire? If it's within 6 months, it's a really prudent point to yourself to start to think about what action do I need to take right now, or start thinking about talking to your lender or a broker, or start researching online to avoid really the pitfall of dropping onto a reversionary rate, which could be higher.
Would you say there are likely to be people out there who would be saving money if they understood their mortgage better?
Absolutely. Many homeowners don't realise that their deal has ended, or may have missed correspondence from their mortgage provider. So ensuring that the mortgage is working for you is a really important one. That contract between you and the lender is really important.
Wouldn't that be a happy day if you actually got down and looked at all the documentation and found that you could save the money tomorrow?
It absolutely would, and we see many examples of that happening on a regular basis.
Good to know. It can be tempting to put things to one side and not get to grips with the detail of your mortgage, but it is super important. And as we've just heard, even making small overpayments make a huge difference further down the track. So it's worth it. There are people there to help you with it. You could lose your home if you don't keep up your mortgage repayments.